You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Well, let's unpack this. Imagine having like a crystal ball for the global markets, giving you a heads up on everything from major currency shifts to geopolitical tremors. While we don't have that crystal ball, we are diving into a stack of insights that gets us remarkably close. The global markets. Week ahead briefing. Our mission today really is to give you a true shortcut to understanding the economic heartbeat of the world, highlighting what might actually move the needle this week.
Yeah, what's truly fascinating here is how intricately interconnected these global forces are, often in ways you might not immediately expect. We're going to try and distill the most important nuggets of knowledge from this briefing, focusing on foreign exchange, key commodities, critical tariffs and trade developments, and the underlying geopolitical backdrop. These are really the threads that could genuinely steer market price action and, impact the world around us.
Okay, first up, let's talk currencies. Our global economic story, it often begins and ends with foreign exchange or FX movements. They're often the earliest indicators of deeper shifts. And this week, well, the FX calendar is looking particularly dynamic across continents. From the U.S. to Europe to Asia, there's quite a lot happening that will shape currency movements.
Absolutely. And if we connect this to the bigger picture, especially for the U.S. dollar, two critical data points are really front and center. On Thursday, we get the Consumer Price Index, the CPI report, which is always a big inflation gauge.
Right.
But even before that, on Tuesday, we're looking at the preliminary BLS benchmark revisions.
Okay, so a bit of a technical term there, BLS benchmark revisions.
Yeah.
For listeners who might not be deep in the weeds of economic data, what exactly are those and why are they so important this week?
That's a good question. The BLS benchmark revisions are essentially updates, think of them as corrections, to how the Bureau of Labor Statistics adjusts its past jobs data. It's kind of a significant reality check, offering a more accurate look at employment trends for the previous year or so. So this pair of data points the revisions first, then the CPI will profoundly shape what the market calls rate path expectations, meaning how investors anticipate future interest rate changes from the Fed. And that, of course, affects how the dollar is positioned. Those BLS revisions, they could even reshape the perceived jobs trend all the way from April 2024 through March 2025. So it's a crucial early week data point. It could truly reset our understanding of the labor market.
Right, so a lot to unpack with the U.S. dollar then. But as goes the dollar, so often go other major currencies. Let's shift focus across the Atlantic. How are Europe's key central banks and economies positioning themselves this week?
Indeed. Over in Europe, the European Central Bank, the ECB, they meet on Thursday and will be releasing updated economic projections. Now, for the euro itself, the ECB is widely expected to hold policy steady. No change to interest rates anticipated.
Okay.
So the real watch point, what you'll want to look at, is their forward-looking guidance, and specifically that 2026 inflation track. Any hint that prices are proving stickier than their current 1.6% projection, that would significantly impact euro crosses, pairs like USD or Euro GBP. And this isn't just about the euro's value. It's about the fundamental challenge the ECB faces navigating a landscape where inflation might just be more persistent than expected. It's a balancing act, really, that many central banks are performing right now.
And beyond the main Eurozone players, we also have some other important monetary policy decisions brewing in Europe, don't we?
That's right. Plus, we've got Norway printing its CPI on Wednesday. And Turkey's CBRT, that's their central bank, deciding rates the very same day as the ECB.
Busy Thursday.
Yeah. For the Norwegian krone, a steady or maybe gently lower Norwegian core inflation print. That would strengthen the case for cautious NOK strength ahead of next week's Norges Bank decision. Gives some context. And for the Turkish lira, well, the CBRT decision comes after a hotter August CPI and a weaker currency.
Right.
This context argues for only gradual easing of monetary policy, if any at all, to avoid what they call re-dollarization pressures.
Where people just switch back to holding dollars.
Exactly, because they've lost faith in the local currency. It's a very tricky path for them. And finally, for sterling, the pound, its near-term tone will really hinge on how much July's UK GDP moderates after what was actually a stronger Q2 run rate. Friday's UK GDP adds a late-week pulse check for the UK economy's health.
Okay, and then shifting across to Asia, Japan reports its Q2 GDP on Monday, and China follows with August inflation figures on Wednesday. How do these fit into the broader FX landscape, especially with, all the talk about trade recently?
Well, both will be read through pretty specific lenses, I think. Japan's Q2 GDP, it's expected to confirm modest growth, but FX attention will likely stay more keenly focused on that freshly signed U.S.-Japan trade order.
Right, the new agreement.
Yeah, and the stated push to lower U.S. auto tariffs within roughly 2 weeks. That mix can influence the Japanese yen through both trade dynamics and what we call terms of trade channels.
Which is basically export prices versus import prices.
Exactly. So it's not just about the raw economic numbers, it's the policy implications too. Now, for the Chinese yuan, China's August CPI is expected to tread near zero again.
Still very low inflation there.
Very low. Another soft print would keep the CNY sensitive to policy support headlines rather than, say, organic price momentum. It really highlights how reliant China's near-term growth remains on direct government intervention rather than a self-sustaining recovery. And that has pretty significant implications for global demand and commodity markets.
Okay, let's pivot to commodities then. Here's where it gets really interesting for global resources. The week opens concentrated on OPEC plus deliberations. It feels like this group always has the potential to throw a curveball.
Absolutely. OPEC plus A, that's the Organization of the Petroleum Exporting Countries, plus its allies like Russia, they meet Sunday with a range of options on the table regarding oil supply. They could start on a pause in the current cuts, they could start a phased unwind of prior cuts, or perhaps even a small, measured increase in production.
So lots of possibilities.
Yes, and the messaging has been quite mixed in the run-up. Some sources suggesting bringing supply back more quickly, while others stress there's no preset agenda, emphasizing flexibility. Imagine a phased approach, maybe something like 12 months of small, consistent monthly additions. That would only bring modest barrels to the market initially.
Right.
Especially when you consider that some members might not even have the practical spare capacity to pump much more right now. So this guidance, whatever comes out late Sunday, could really set the opening bid for crude sentiment through the week. You'll want to keep an eye on that. The implications for global energy prices are, well, massive.
Definitely. Beyond oil, what about gold? Often seen as that safe haven, an important portfolio diversifier, especially with all this economic uncertainty floating around.
Gold, yeah, it retains a pretty firm bias heading into Thursday's U.S. CPI. It's repeatedly shown resilience, even on days when the dollar firms up.
Interesting.
It does raise an important question about gold's role in diversified portfolios for you, particularly how it holds up against inflation expectations and dollar strength. It often acts as a counterweight, doesn't it? And its continued strength, even with a stronger dollar, suggests some underlying investor demand for safety.
Okay. And then industrial metals. Critical for global manufacturing and, frankly, so much of our everyday lives. How are they looking this week?
Industrial metals, they head into the week balancing those better-than-feared China PMIs.
The Purchasing Managers Index numbers?
Exactly, a key indicator of manufacturing activity. Balancing those against still quite tepid domestic Chinese price dynamics. Copper, in particular, which is often seen as an economic bellwether, Dr. Copper, they sometimes call it.
Right.
It'll take its cue from Beijing's support signals and the general global growth pulse embedded in that U.S. data run we just discussed. So China's policy moves and U.S. economic health are really the key drivers here for understanding the sector's trajectory.
Okay, shifting gears again. Trade and tariffs. These are such a live driver across regions, a real global puzzle unfolding right now. In Washington, we're seeing some pretty significant signals that could reshape international commerce and maybe global supply chains.
Yeah, it's fascinating here is the multifaceted approach we're observing. The administration has said substantial chip-related tariffs are coming very shortly. But importantly, with carve-outs for major U.S. tech platform partners.
Okay, so not a blanket tariff.
No, these carve-outs are an interesting nuance. It shows an attempt to target specific areas while maybe protecting others. But the overall move, it still points to further fragmentation in global tech supply chains. And simultaneously, the White House just signed the order implementing that U.S.-Japan trade agreement.
Right.
This involves nearly all Japanese imports facing a 15% baseline tariff. That's the standard rate. Japan, in return, expediting a 75% increase in U.S. rice purchases, and there's a reaffirmed investment package. Tokyo, however, is still pushing for most favored nation treatment in pharmaceuticals and semiconductors.
And most favored nation treatment, just to clarify, means what exactly in this context?
Essentially, it means they're pushing for the lowest possible tariffs or trade barriers that the U.S. offers to any other trading partner for those specific goods, pharma and semis.
Got it.
And critically, lower U.S. auto tariffs for Japan are slated to take effect within roughly 2 weeks, pending the final steps. It shows this really complex dance of new duties and concessions, doesn't it? Highlighting how countries are reevaluating and realigning trade relationships in real time.
It certainly sounds complex, and it's not just the U.S. and Japan, is it? What else is brewing on the trade front that could impact global supply chains more broadly?
Well, this raises an important question, how these regional moves connect to the bigger picture of trade alliances. The U.S. is also preparing to open a formal review of the North American trade deal, USMCA, with Canada and Mexico. That could lead to significant renegotiations down the line.
Okay.
Separately, Mexico is weighing tariffs on imports from non-FTA partners, countries they don't have a free trade agreement with, including China. That could significantly alter trade flows in the region, maybe impact manufacturing relocation decisions.
Interesting.
And China, for its part, announced anti-dumping duties on certain U.S. optical fibers effective September 4th, a bit of tit for tat there. But there's also this fascinating private sector twist to the tech trade axis.
Oh.
Anthropic, a leading AI company, says it will restrict AI service sales to Chinese-owned groups and other named adversaries. Why? To limit potential military or intelligence use.
Wow, that's significant, a private company making that kind of geopolitical move.
It is significant. It demonstrates how private companies are now actively navigating and responding to these geopolitical tensions. It adds another layer entirely to the global trade landscape that we all need to understand.
So, wrapping all this together, what does it mean when we look at the bigger geopolitical picture? It certainly remains an active volatility channel across the globe, with several key flashpoints demanding our attention this week.
Absolutely. The UN General Assembly convenes on Tuesday, and Iran is expected to dominate the nuclear-related diplomacy there. This comes after the E3, that's France, Germany, and the UK, triggered the UN sanctions snapback mechanism.
Right, the snapback mechanism. That sounds pretty serious. What does that actually entail for Iran?
Well, it's a process where previously lifted UN sanctions under the old nuclear deal can be quickly reimposed if a country is found in non-compliance. Now, Tehran has called the E3 move illegal, but they've also signaled some conditional openness to talks. This is a really critical development for global stability, particularly in the Middle East. And it could have cascading effects on oil markets depending on how it all unfolds.
Definitely something to watch. Closer to home for many of our listeners, what's happening in Europe's political theater and also regarding the ongoing conflict in Ukraine.
In Europe, well, France's no-confidence vote on Monday is widely expected to unseat the prime minister.
Okay.
Markets will be watching for the president's choice of successor and any clear path toward new elections, given the country's quite fragmented assembly, could create some political uncertainty in a key European economy. On Ukraine, both U.S. and Russian leaders have signaled some readiness to speak, while Moscow has pushed back firmly on the notion of foreign troop guarantees for Kyiv. Expectations for any fast-moving breakthroughs, well, they remain limited. But even headlines alone can sway energy and grains risk premia.
That's the added cost for uncertainty.
Exactly, the premium for uncertainty or potential disruption. And that directly affects you, the consumer, at the pump and the grocery store. It's a powerful reminder, isn't it, of how seemingly distant geopolitical events have very real, tangible impacts on our daily lives.
Absolutely. And beyond those major headlines in Europe and the Middle East, are there any other significant flashpoints we should be aware of in the Americas and Asia, perhaps?
There are, yeah. In the Americas, the Pentagon reported 2 Venezuelan military aircraft flying near a U.S. Navy vessel in international waters. It's a stark reminder that Latin American flashpoints can surface quite quickly. A localized event for now, but indicative perhaps of broader regional tensions. In Asia, North Korea's leader met China's president and pledged deeper strategic cooperation. And later this month, the U.S., Japan, and South Korea will conduct joint air, naval, and cyber exercises. That underscores the region's evolving security coordination. This dynamic interplay of alliances and military posturing keeps the region a really critical watch point for global stability.
Okay, that's a lot to track. Let's quickly try and put some key threads back on your dashboard for the week ahead.
Yeah.
The things to absolutely keep an eye on. First, Tuesday's preliminary BLS benchmark revisions, and then Thursday's US CPI. These will materially reshape our job and inflation perceptions. Then, the ECB's updated projections on Thursday. They may prove just as market-moving as the actual rate decision itself.
Definitely.
We also need to watch for that OPEC Plus guidance late Sunday. Could set the opening bid for crude sentiment through the week. And don't forget the formal implementation mechanics of the U.S.-Japan trade deal, plus any further details on those impending U.S. chip tariffs.
Right. Those are the developments with perhaps the most potential to move currency and commodity risks this week.
Phew. That's a lot to digest, but hopefully you're walking away with a much clearer picture of the forces shaping our world this week. These aren't just headlines, are they? They're the undercurrents influencing everything from global trade policies right down to the price of your morning coffee.
Yeah, and this raises an important question, I think. As we see economic data, political will, and market reactions all intertwine like this, how might the seemingly minor details, like the specific wording of ECB guidance or maybe the nuanced messaging from OPEC plus Indo, how might those end up being the most significant signals for the week ahead? It's a powerful reminder, really, that truly understanding the markets means looking beyond the obvious headlines and seeking those subtle, interconnected clues.
Exactly. Keep tracking the data, keep tracking the diplomacy. Those are truly the key developments to watch right now. Thanks for joining us for this deep dive. We'll be here next time to help you make sense of it all.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.